Bear flags are flying and the SPX has a target of 57.30 should we see price continue lower. Now, the markets continue to keep us on our toes despite careful planning. The depth of this bearish movement is still a surprise and continues to smash expectations. However, we've got a new pattern setting up, so let's take a look at the charts. So the markets continue to thrive on uncertainty. This range that we saw the last several weeks ago, if we take the height of that range and deduct it or add it to the range boundaries, in this case we're going to deduct it, we've got this range target, and as you can see here, that breakout move just obliterated the initial target. It not just doing 1 times target, it almost did 2 times the target projection. So coming into today's session, we've got this wild move down with, again, a very nice sideways movement. Again, this pattern is usually considered to be a bear flag. It's usually a continuation move to the downside. So again, if we just measure the depth of that movement and then project it down, we get, again, the projected target. So we have potential down to 57.30 with this breakout pullback setup. So again, we've got this nice, very large target. Over on the daily chart at the top left, we could also argue that we've got a breakout of this rising range. Again, we can take the height of that range and deduct it from the breakout point, and that takes us down to about 5,700. That is potentially on the cards if we're going to see the markets free fall. That's where it could get to. Again, for a change, I'm not bearish on these markets. I'm actually quite bullish despite these movements. Again, these movements are driven by the Fed's announcements and policy changes, and I personally think we're seeing an overreaction. I'm reminded of December 2018, where we saw a similar move in December over a few days. And again, these wild, very sharp reactionary movements, they're often very short-lived. So again, we've got the potential down to 57.50, and I would imagine this is going to be a great location to see price react and possibly rally into the year end. The overnight futures are already down about 50 points, so the continuation does seem likely, and it's adding fuel to that bearish continuation. And should that fail, what if it doesn't continue down? I've got my bull trigger above 59.50 as well, just on the failure of the pattern to continue lower. Anyway, while other traders panic, we're looking to profit. Again, we plan for this eventuality of this bearish breakout move. It should be no surprise that it happens. Again, as I mentioned, the surprise for me is the depth of movement. You just don't think that there's going to be as big a move as what we saw. So again, I'm not going to complain. It's always nice to get a nice, fast, quick directional movements, regardless of the strategy that we adopt. So right now, I'm looking for that continuation down. I've got my bear trigger below yesterday's lows. I've got my bull trigger above yesterday's highs. And looking at ADD at the bottom left, we can see that we've got the potential still to come back into that bearish extreme. We went from the bearish extreme, we gapped into the bull extreme yesterday, and we're kind of middle of the ground again. So back into that bearish extreme, that could be quite nice for that push down into the 57.30 bear targets, and then we can assess for what's going to happen next, whether it's going to be a turn or if we're going to continue to push down to the larger target at that 5,700 level. If you like what you've heard and you want to learn a proven profitable system for collecting income from SPX using options, then click the link next to this video and you'll be taken to a free training that I recently held where I outline one of my favorite money making patterns. And if you click the link, I will see you over there.